Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Before getting into tonight's video, I want to make an announcement. Since this is a holiday week, I will be having a different schedule as far as how the videos will be coming out. There will be videos on Monday, Tuesday, and Wednesday. And then there will not be a live stream on Wednesday, but there will be a training for WaveTech on Tuesday. Now at that training, you may want to show up. We are actually introducing you to our Portfolio Expert platform. There'll be a lot of new information to come out on that meeting. As we look back on last week, it was an interesting week because we saw the S&P down 0.8%. The close on Friday was nasty. There's a lot of selling as we came into the last half hour of trade. But we're seeing a bit of a rebound overnight as the futures are slightly positive. But the S&P finished down 0.8%. NASDAQ was up 0.2%. And the big winner last week was the Russell, up 2.4%. Now, I've been talking to you for a while about this new rotation or new leadership that's coming in. And we definitely saw that take a full step forward last week. I'll go through this in detail here in a few minutes in the technicals. But as we come into this week, there's just a lot going on, even though it's a shortened holiday week. And the economic calendar is incredibly detailed. Let's go through that step by step because there's a lot to talk about. And then on Wednesday is the big release of a lot of these events, and I'll go through details there. As we look at the calendar, on Monday, we have PMI manufacturing coming out. On Tuesday, we see the FHA price index, Case-Shiller price index, and consumer confidence. All of these numbers, I'm expecting these to come in very strong as the impact of these elements are going to be fairly substantial because the markets are focused on the housing sector at the moment. On Wednesday, we have GDP. It's a second estimate. It's expected to show a 33.1% advance. That's pretty substantial, but coming from where it was, that's not to be unexpected update to last time where we saw a 32% update. So they're expecting a slightly higher number there. Durable goods, not a lot to go here, but there's other elements here. We're going to see the continuing claims and the claims come out on Tuesday. The claims numbers expected to show a 750,000 increase, and the continuing claims came in at 6.3 million. I'm expecting to see that number come in under 6 million. And there's a combination of things going on there. What's happening with these numbers is they're going to continue to decline. I expect to see them under 5 million shortly after the beginning of the new year. This number will continue to go down. Now, whether or not this new shutdowns that we're hearing about across the country get worse, this could change the forecast for these numbers. But generally speaking, markets don't appear to be focused on any type of catastrophe as we come into these numbers. The final thing that we'll have to pay attention to as we come into this week is the earnings. This is the final tranche of big earnings coming out. There's 223 earnings reports coming out. They'll all be out by Wednesday afternoon, so there's a lot to unpack there. There are some material earnings that are coming out. I'll cover this in detail over the next two videos as we come into Wednesday's action. Finally, we are seeing further positive rotation in our database, and I'll go through all the details here in a minute. So let's go ahead and take a look at the charts and see what they're set up for this week. As we review the WaveTech Database on intermediate level, going to the Portfolio Expert dashboard, we'll notice that there's 481 net new buy signals, and those are optimized signals. There was a total of a little bit over 1,000. But as we look at the charts over here, where equities are 55% long, ETFs 58, and mutual funds 65. When I show you the overall database, you'll see that we're right about the same as the mutual funds in that 65-66 percentile range. But as we look at the chart here, we can see something interesting that normally only happens if there's going to be a continuation of the pattern. If we look over here, as we came into January 21st, we started seeing selling come into our database all the way into mid-February as it started to see it sloping off. And then, of course, when the markets turned south, it did substantial amount of selling. And you can see right after the lows were formed, the week after the low, now these are the intermediate charts, we saw it increase. But now we saw a peak at 55%. Now we're seeing it back at 55, and it normally will not get that secondary surge if it's going to go into a top. And this suggests that we're going to see a continuation to the upside. This is likely to move toward the 74 plus percentile bullish range on the intermediate. As we look at the sectors across the board, we saw buying. You can see this dark green area shows that there was net buying coming in on each one of these sectors. As we go down below, it's a little more spotty as far as what's being bought, but energy is starting to come on a bit here, and then ultimately the financials have moved up, most of them around the 60 percentile range bullish. This is the view of the short-term database, which is the daily models. We're now at 11,891 long signals, 72.36%. On Friday, we saw about 420 new buys, and we saw 360 sells. So it's basically a neutral rotation there on a short-term basis. We've been printing up around 72% long on this database. But as we look at the intermediate, you see there's 770 plus 256. This represents that 1,000 new buy signals, but the net was the 400 and change that I showed you on the optimized models. Now, each one of our models have the best of breed for each one of these, but we did get an overall bullish ratio. Down below here are the individual sectors that we're looking at, and they are on a short-term basis, and most of these are fairly new, within 1 to 2 weeks, and we are seeing some decent returns on them, but it's somewhat spotty. Healthcare continues to be a choppy market. The best returns have been basic materials, energy, financials, and technology on a short-term level. As we look at the weekly database, 67.46% of this database is now long, 11,085. So there's quite a few trending signals in here, and we did have a bullish ratio on both models this week. And we saw 1.2 have 770 buys, 3.2, 256. So we're seeing this positive rotation continue. As we look at the intermediate trends on the sectors, we see basic materials at 16.65, conglomerates 16.65 return, 32% return, and the consumer cyclical. Now, these have been on for over 100 trading days. And then finally, consumer non-cyclical up 20%, up 99 days. The newer trades that come in the last 2 weeks are a bit underwater, but these take a while as they normally hold for about 200 to 240 days, which is the better part of a year. As we begin the review of the S&P futures, we're up 12.25, up 0.35 overnight. We're looking at a configuration that suggests that we're going to stay sideways with a slight upward bias. I've been talking about the 10-day moving average for the last several days. We're trading back toward that number. The 10-day moving average is now at 3571.88. As we look at the market grid, you'll see that R1 is 3566. That's exactly what the high has been so far tonight. S1 35.42, the low 45. So basically we've already printed an S1 R1 level. I expect to see an R2 number print that will put us up toward that 10-period moving average. R2 is 35.78. There's substantial support if we did print down toward the 35.29 level. Between 35.29 and the 35.16 level is substantial support on the futures. The weekly charts continue to illustrate a very bullish tone as we continue with the futures. The R1 number on the futures is 35.96. R2 is 36.43. With the holiday week, I don't know that we're going to be able to trade an R2 number. S1 is 35.12. This is at that lower end of that support level. The other number to look at in the sequence is the 10-week moving average, which is substantially lower at 34.48. As we go to the S&P cash, as I mentioned in the opening comments, there was a substantial sell-off as we came into the close, pushing us down toward the low of the session, as the lows on Friday were 35.56. We went out at 35.57.54, so we basically closed at the low of the session. As we look at the grid for today, S1 is 35.48. I suspect that will hold if we print down in the morning. So far, if we hold this strength that we're seeing in the futures, we're likely not to get to that number. 35.66.79 is R1. 35.77.13 is R2. So I'm expecting an R1, R2 range on the upside. I'm still seeing a lot of stability across the board, and this is most evident when we go to the weekly chart, as we see the PPMs on a weekly are plus 0.64 on PPM1, plus 0.78 on PPM2, and PPM3 is at a 0.145. So this is all positive. This tells us that we are an uptrend, but the support numbers, like I pointed out in the futures, are substantially lower as far as the weekly goes, down toward the 34.31 level. I don't see us getting toward that level. We did experience what's called an inside bar last week, and typically the range that we're going to be paying very close attention to will be the lows that we saw last week, 35.43, and the highs of 36.28. My expectation is that we will attempt to challenge the upside at the upside at the 35.94 at the R1 number. We could print 36.35. Last week's high was 36.28. That would be a substantial move if we got above that, and it also would signify that we ultimately will retest that 36.45 level that we printed 2 weeks ago. My expectations are that we will stay in this positive sideways mode for the next several days. The key pivot number for today will be that 35.43.84 level. We penetrated that, then we'd go down to the support levels that I mentioned in the daily analysis. Before I move on to the NASDAQ, I want to review the chart. This is the long, the Russell, short the NASDAQ trade. This is the IWM versus the PSQ. This is a little more aggressive way to play this particular trade, but you can see it's worked quite well and continues to move higher. This last couple of weeks has been very strong for this trade, and I do expect this to continue as we go forward. Let's take a look at the Russell, as what we can see is this sharp surge in the last 3 weeks has been substantial. We're also seeing the PPMs. PPM1 is a plus 1.81, PPM2 plus 1.26, and a plus 1.7 on PPM3. We're not seeing that huge acceleration on the longer term average yet. PPM1 and 2 are suggesting this is a substantial uptrend, and we're likely to see potentially 5 bars in this pattern. So we've had 3 up so far. I would expect 2 more weeks up before we'd see a top. And if we just look at the grid for this week, this is the weekly chart. The upper range of this, we closed at 1785, R1 1807, R2 1832 on a weekly level. So I would look for at least that level. There is a potential to go up toward that 1879 level, but I think with the holiday week, we're going to be lucky to see it print between R1 and R2. On the downside, S1 1763 is going to be a key pivot number. If we get below that, then 1738 will be substantial support. I don't see us trading below an S2 on a weekly. Next market I'll cover is the NASDAQ. What we're seeing in the NASDAQ is a continuation of this very narrow pattern. I've been talking about this for about 6 sessions now. We've stayed within the grid. We're hovering right around the 10-period moving average, 11,898, basically 11,900. The low has been 11,891, and so far the high has been 11,000. What we're seeing here is just a continuation of this pattern, but we are also starting to see the PPMs turn up a little bit, not a lot. We're at plus 0.11, plus 0.12. But this is one of those patterns that's a very pivotal pattern from the standpoint of directional movement. There's not a lot to be told from this chart. Just like with the S&P, all of the details and the trend details are coming from the intermediate mode. Just taking a quick look at the market grid here, you'll see that S1 is 11,865. R1, 11,946, probably S1, R1. I don't think we're going to get down to S1. It looks like we're going to come in fairly quiet and maintain most of the range that we've seen so far tonight. The possibility is to move to about 11,990. That's not a big move. Above that, you can see the numbers here, 12,035. As we look at the weekly grid, this is actually more interesting. We're seeing acceleration on PPM1. We're just about to take out the second derivative, which would be positive. The current configuration suggests that we're going to go back to a minimum this week of 12,092, possibility of seeing 12,301. So there is some upside on this market. The S1 number is 11,918. The 10-week moving average, which is just below here, is 11,647, and I expect we're going to be locked in this range. So S1 is the most likely downside, with R2 on the upside as an extreme. The final market I'll cover tonight is gold. I'm going to stick to the weekly analysis. There's not a lot to be gathered by looking at the dailies tonight, but the weekly continues to be dominant here. And I've been talking about the 10-week moving average. As we come into today's action, the 10-week is actually at 1897. It was 1906. I was talking about trading back over 1900. Now with a PPM of minus 0.48 PPM1, this suggests it's going to be difficult to get back above 1900 level, and it looks like we're going to continue to drift down toward the test that 1850, 1848 lows, and there is a potential for us to trade down to the 1827 level. I think this wedge that's been forming over the past couple months continues to be driven by this downward slope 10-period moving average. The 21-period moving average is flattening out substantially, so that resistance zone will be set up ultimately between 1895 to around 1915. That's going to be substantial resistance overhead, and the extreme support on the downside for the moment will be 1827. I don't really see any trades or any reason to be in this market at the moment. I'm just expecting for this week a sideways choppy range. This will complete the video. Thank you for watching. We'll talk to you tomorrow night.